Hello everyone. Welcome to my YouTube channel Indian Bull vs Bear. In this video, I'll review Indian stock market's performance for the just concluded financial year FY 24-25. Before moving on, please read the entire disclaimer carefully. This is the end of this video. I will present the information on these 9 topics: market overview, major events, IPO space, FIs and DIs activity, INR USD exchange rate and gold and oil prices, major corporate actions, economic data, retail participation in the market, and finally, I'll conclude and provide the future outlook for the next financial year. So, FY 24-25 was a very volatile year for Indian stock market. Let's see how the indices performed. So, I'll I'll present 5 Nifty indices, 19 sectoral indices, and we'll see the top 10 major economies of the world. So, let's start with Nifty indices. So this graph shows the returns of 5 major Nifty indices across the year. So Nifty 50, Nifty Next 50, Nifty Mid Cap 50, Nifty Small Cap 250, and Nifty 500 are the 5 indices that I have included in this graph. April was a very good month. So the year started with a good note. Then it went down in May. So May is historically a weak month for our market. The situation again improved in June, but then the monthly returns keeps on going down. It studied a bit in September, but it corrected significantly in October. In November and December was more of a consolidation phase, and then there was deep corrections in January and February. March provided some respite, and the indices gave some positive returns. So overall, if you see broadly, there is a downtrend across the year except for probably March. The Nifty 50 managed to give returns of only 5.32%. However, the average returns of Nifty 50 are somewhere historically 11 to 12%. Nifty Next 50 gave less than 4% returns. Nifty Mid Cap 7.65% yearly returns in the financial year 24-25. Small Cap 250 5.39%, and Nifty 500 5.35%. So extremely less returns, even less than the bank FD, significantly less than the bank FDs for all the 5 indices. Now let's move on to the next graph and see how uh, financial year 24-25 fared against the financial year 23-24 and the 10-year CAGR of these 5 indices. So the green marbles here shows the financial year 24-25 performance of these 5 Nifty indices. The gray marble shows the 10-year CAGR, and this orange marble shows the financial year 23-24 returns. So Nifty 50, 5.32% in last financial year. The 10-year average is 10.72, and the financial year of 23-24 it was 28.61. So the first impression by seeing this graph is that there is even no competition between the financial year 23-24 and the financial year 24-25. Clearly, 23-24 was on a altogether different level as compared to 24-25. Nifty Next 50, 4% against 60 odd percent. Nifty Mid Cap, 7.5% against almost 60%. Nifty Small Cap, 5.5% against 63%. Nifty 500, 5.5% against almost 40%. Even 10-year CAGR, if you see, Nifty 50 almost half, Nifty Next 50 one third, Nifty 50 almost half, Nifty Mid Cap 50 almost half, Nifty Small Cap 250 almost half, Nifty 500 almost half. So seeing this graph gives a very good idea of how bad that financial year was for for the Nifty indices. Now let's have a look at the sectoral indices. So this graph shows the 19 major sectoral indices. Couple of standout performers are financial services. Financial services has beaten the returns of FI 23-24 in the last financial year. So as media. So financial services and media, and I think these two all are on from the 19 sectors which has actually outperformed the previous financial year. There were several disasters as well. For example, see this CPSC minus 56% against almost positive 100%. Realty minus 5 odd percent against 132%. PSC is similar to CPSC. PSU banks negative 10% as compared to positive 90%. So clearly, except two sectors across the board, all the sectors have performed significantly badly in financial year 24-25 as compared to the previous financial year, that is 23-24. Now let's see how Indian economy as a whole performed against the other top 10 economies of the world. So this graph shows that, and this over here is Indian economy. So this is Nifty 50, and similarly, I've taken the top index from all the uh, markets. So Germany performed the best with 20.07% in the last financial year, and Japan the worst with minus 11.77%. Rest all are in between. As I said, Germany is on top, then Canada with 12.4, then Italy with 10.36, then China with 9.68, then UK with almost 8%, then is US with 6.8%, then India with 5.32%, then Brazil with 1.68%. At number 9 is France with negative returns of 5.06%, and as we've seen, Japan is the worst performing economy in the last financial year with negative 11.77% returns. So let's now move on to the major events of the financial year which impacted the Indian stock market. So I have compiled top 10 events. There were several other events as well, and but I've tried to compile them and keep to a minimum. So I managed to uh, identify top 10 major events in the last financial year. First is the market correction on concerns of overvaluation. So it was quite clear by the second half of the financial year that the analysts feels that the Indian share market is overvalued, and the market showed significant corrections, especially from October to February 2025. So from October 24 to February 25, 5 months, Nifty gave negative returns every month. That was the first time it happened actually. The Nifty finally managed to give only 5.32% overall returns in the financial year. Second major event was the weak Q3 earnings and slowing growth. There was a lot expected from the companies in their Q3 results, but the Q3 results disappointed, and the market showed significant corrections in the months of January 25 and February 25. GDP growth too slowed to 5.4% in the Q2 FY25. Third major event was the FI outflows, which was countered by DII support. So FIs are the net sellers in Indian stock market for quite a few years now. Financial year 24-25 was not nothing different. The FIs in the cash market sold net 4 lakh crore, but DII supported and they injected 6 lakh crores in the entire financial year in the cash market. So there's a tug of war going on between FIs and DIs, and DIs are outperforming FIs. And so just imagine a scenario if DIs were not there with this much amount of injection, where would we have been in now? Then the fourth major event was the economic survey of 24-25. This provided insights into the potential future growth, but couldn't prevent the immediate market correction. Next is the US tariff policies and trade war concerns. So US presidential results came out in the third quarter of the uh, financial year 24-25, and Donald Trump won the election, and he started talking about these tariffs and all those things right from the word go. And there was a growing concern in the markets worldwide about the tariffs that he is going to implement. He has implemented a few, and in the financial year 24-25, and there were concerns about the trade war. There was a lot of uncertainty, and the one thing that market does not want is the uncertainty. If there is a negative news, be there a negative news, the market would discount for it and then moves on. But as long as there is uncertainty, the market behaves erratically. So, and that is what happened in the second half of the financial year 24-25. And the next major event was the US Federal Reserve decision. So the US Federal Reserve decided to be cautious in the future rate cuts, which impacted the market sentiment. The next major event were the geopolitical tensions. So the Russian Ukraine war entered into, I think, the second or third year in the last financial year. And there was a major conflict between Israel, Palestine, and Hamas as well. Both of these are still unresolved, and hence there is a geopolitical tension in all the markets, all the major economies of the world. Another major event was that the RBI got a new governor and the SEBI got a new chairperson in the last financial year. RBI rate cut was another major event, with RBI reduced the repo rate by 25 basis points to 6.25%. And this was the first rate cut in almost 5 years. The previous rate cut was in May 2020. So much needed rate cut here. The last point is the RBI measures to increase liquidity. So RBI took two major steps to increase the liquidity. First was to purchase the government securities, and second was to organize the USD INR buy swap swap auctions. So these are the two major steps that RBI took to increase the liquidity in the Indian stock market. Now let's see how the IPOs space looked. So there were total 229 IPOs listed in the financial year. 80 of them were main board and 149 were SME IPOs. One of the IPO was cancelled, I think that was of Traffic Soul, and in another one subscription was paused for a few days. I think this is for C2C. So there was a um, some issues which SEBI has found, and they have paused the subscription in this IPO, and they have even gave the investors a chance to actually pull out their application if they want. But whatever the uh, doubt was, that was resolved in a few days, and the subscription started again, and the company was listed without any issue after that. Now, the main board IPOs raised around 1.62 lakh crores in the last financial year, which was more than 2.5 times of the previous year. The major IPOs were Hyundai Motor with more than 27,000 crores IPO, Swiggy with more than 11,000 crore rupees IPO, and NTPC Green of around 10,000 crore IPO. The return of new age tech companies and NATCs also added momentum. 10 mainboard IPOs were subscribed by more than 180 times. So there was a frenzy in the market in last financial year, which cooled down by the end of the calendar year, but still there was a insane frenzy in the market in the especially in the earlier months of the financial year. Now let's see the subscription. So this graph shows the top 10 IPOs by subscription. So these are the top 10 IPOs and the subscribe by subscription. 320%, 20x times subscribed. So 320x times this IPO was subscribed. The others were not too bad either. So there were 10 IPOs which were subscribed more than 185 times. Now let's see the top 10 by returns. So this is the return by first week of March. Sorry, first week of April. So by first week of April, this is the return, and this IPO gave returns of almost 300%. That is insanely high returns. This too was good, and all these are good uh, for those who got the allotment in these IPOs. Now let's move on to the FIIs and DIIs activity. So this graph shows the FIIs and DIIs activity in the last financial year. The yellow line over here shows the DIIs activity, and this line over here shows the FIIs activity. So we can see that throughout the years, DIIs are more active in terms of buying, and FIIs are more active in terms of selling in the Indian stock market. There were only 4 months: June, July, September, and March, in which the FIs were net buyers. Otherwise, in rest 8 months, they were net sellers in the Indian stock market. The financial year saw a fascinating tug of war between FIs and DIIs. For the majority of the years, FIs exhibited a net selling trend, pulling out a significant um, around 4 lakh crore from the cash market. The selling pressure could be attributed to factors like rich valuations of Indian equities, a weakening rupee, and a shifting global investment preferences. However, DII stood strong as net buyers of around 6 lakh crores, injecting confidence into the market and often counterbalancing the FI outflows. This consistent buying activity uh, culminated in a substantial 37,000 crores net purchase in the March 2025 alone, highlighted their positive outlook on the domestic growth story. This robust support from DIIs, fueled by increasing retail participation through SIPs and a growing domestic investor base, played a crucial role in absorbing the FII selling. Now let's see another interesting graph which shows the FIs and DIIs trend over the last 5 financial years. So this is the one. This marble shows the DIIs and this marble shows the FIIs, and it is for the last 5 financial years. So as we can clearly see, the last time FIIs were net buyers in Indian stock market was way back in FI 2021. Since then, they are the net sellers, and the situation is exactly opposite for DIIs. DIIs were net sellers only once in the last 5 financial years. That was in 2021, financial year 2021. Since then, they are the net buyers in the Indian stock market. In the last just concluded financial year, you can see the DIIs have bought more than 6 lakh crores in the cash market, whereas the FIs have sold almost 4 lakh crore. So DIIs are performing extremely good in the Indian share market. Now let's see the USD to INR exchange rate and gold and oil prices, how they behaved in the last financial year. So INR to USD exchange rates in 23-24, $1 was equals to 83.37 rupees, which in the last financial year, that is 24-25, ended with 85.58%. Now it's interesting to note that in February 2025, the USD and INR reached an all-time high of 88.10, and there was a massive chaos in the market because of that. And somehow the situation eased a bit by the time the financial year ends. In March, let's move on to the gold, and the gold was around 65,000 per 10 grams by the end of the financial year 23-24. And by the time last financial year ended, the gold was approximately 91,000 rupees for per 10 gram for the 24 karat gold. In March 2025, it went up to almost 92,000. So gold is skyrocketing these days, and we all know that gold prices jumps whenever there is uncertainty in the market, and there is no deficiency of uncertainty. And even all the federal banks across the globe are increasing their gold reserves. So gold prices are at another level these days. Let's check out the oil prices. So the oil prices in by the end of financial year 23-24 were around $82.58 per barrel. By the end of the last financial year, it came down to 79.47 per barrel. So at least one good thing for the Indian economy, I guess. It touched $72 per barrel as well in March 25. So it's on a downtrend, and I think it's a good news for the economy. Now let's see the major corporate actions. So the major corporate actions in the last financial year includes fundraising by several Indian corporations, which in total raised a record of around 20 lakh crore through equity and debt instruments, a massive amount of fundraising. Several companies issues bonus shares like RIL, BSE, and so on. Stock splits. Several companies participated in that with Shriram Finance and IO Chemicals, to name the few. Several companies declared dividends, Vedanta, Infosys, NMDC, and a lot more. Major demergers, Siemens Limited and ITC Limited. These were the two major demergers of the financial year. The major mergers include ICICI Bank and ICICI Securities and Adani-led Ambuja Cement. So the Sanghi Industries and Penna Cement Industries were merged into the Ambuja Cements. And there were few buybacks as well. So Auto's buyback of 4,000 crores, Aurobindo Pharma's buyback of 107 crores, and Indus Towers Limited buyback of 2,640 crores are the major of those. Now let's move on to the most important of all, the economic data. So India's real GDP was estimated to grow by 6.4% in financial year 25, according to the uh, first advanced estimate presented in the economic survey. The second advanced estimate released in February 25 projected the real GDP growth to 6.5%. The real GDP, although growth settled at approximately 6.5%, this marks the slowest pace of expansion since the COVID-19 pandemic affected the economy in financial year 21. The nominal GDP at current prices reached 331 lakh crore in financial year 24, up from 301.23 in the previous financial year, indicating a growth rate of around 9.6%. For financial year 25, it is around 363.89 percent, which is the growth rate of around 9.9%. So, real GDP is in downtrend. The nominal GDP growth is in uptrend, and the growth rate as well is in uptrend. For the real GDP growth rate, let's see the quarterly results. So the forecasted in Q1 was 6.9. The actual came out to be 6.7, which is a 2.9% deviation. For the Q2 of the financial year, it was forecasted the real GDP growth rate 6.5%. It came out to be 5.4, which is a massive deviation of almost 17% negative deviation. In Q3, it was forecasted at 6.3%. It came out 6.2%, which is almost 1.5% deviation. And for the Q4, it is forecasted as 6.5%, and the actual is not yet released. It will be released in last Friday, I guess, of May 2025. So almost 1.5 months or so from now. And then we'll know the deviation. So overall, real GDP growth rate is at is in the downtrend, whereas the nominal GDP growth rate is at the uptrend. Now let's see the inflation data. So this is the inflation data. In the fiscal year 24-25, India experienced a notable decline in inflation rates, aligning with the RBI's target range. The consumer price index inflation decreased from 5.4 in the financial year 24 to 4.9 during the April to December 2024. The RBI projects the CPI inflation will average 4.8 for the financial year 25, with the expectations of it aligning with the 4% target by FY26. In response to easing inflation and aiming to stimulate economic growth, the RBI implemented a 25 basis point rate cut in February 25, reducing the key interest rates to 6.25%. Overall, financial year 25 has been a favorable trend in inflation, providing room for monetary policy adjustments to support India's economic growth objectives. Even if you see the in the later half of the year, the inflation rate 5 CPI inflation 5.48, it decreased to 5.22, then further decrease in January to 4.31, and in February it actually came below 4 and reached the 3.61% level. So the average of the year was 4.8%. Now let's see the fiscal deficit data. So in fiscal year 24-25, India's fiscal deficit, that is the gap between the government's total expenditure and its total revenue, has been a focal point of economic discussions. The government initially set a fiscal deficit target of 4.9% of the gross domestic product, that is GDP, for financial year 25, aiming to reduce it from the previous year's 5.6%. This target was later revised to 4.8%. During April to February 25, the deficit widened to 13.47 trillion rupees, representing a 85.8% of the annual target. Analysts anticipate that the government is on track to meet or slightly surpass its fiscal deficit target for financial year 25. Factors contributing to this includes higher than expected nominal GDP growth, steady revenue receipts, and controlled expenditure growth. The government has also set a fiscal deficit target of 4.4% for financial year 26, aligning it with commitment to reduce the budget gap below 4.5% by 2026. In summary, India's fiscal deficit for financial year 25 has been managed within the government's targets, reflecting disciplined fiscal policies and effective revenue collection. Now let's move on to the retail participation. This is the eighth point that I wanted to cover. Demat accounts. So the total Demat accounts crossed 19 crores, and the overall number of Demat accounts continued to increase, but the growth rate saw a significant deceleration, especially in the second half of the financial year. The mutual fund SIP inflows, which actually gave the arsenal to the DIS, the AUM stood at around 12.3 lakh crore, with the monthly inflows consistently stayed over 20,000 crores each month. The total SIP contribution for the first 11 months of the financial year reached a substantial uh, 2.65 lakh crore. This is a significant jump compared to the previous fiscal year. But the SIP stoppage ratio saw a concerning spike in the later months, indicating increased caution among investors. So, in both the demat accounts as well as in mutual fund SIP inflows, there is a uptrend, but the growth rate has been slowed down, which shows that the investors are a bit cautious and are concerned with the market conditions. So, let's conclude. So, to conclude it, financial year 24-25 can be categorized by resilient growth amidst global uncertainties. The key takeaways include solid GDP growth, moderating inflation, fiscal prudence, strong domestic demand, revival in investment, robust external sector, and cautious investor sentiments. The outlook for the next financial year remains positive with a sense of cautious optimism, projecting continued strong growth although some challenges persists, and the major of them include sustaining growth momentum, inflation management, fiscal consolidation, focusing on structural reforms, impact of global factors, reviving private investment, and boosting consumption. So, to sum it all up, financial year 24-25 showcased India's resilience amid global uncertainties with stable economic growth, controlled inflation, and a commitment to fiscal consolidation. So, that is all from my side in this video. If you have enjoyed it, please like the video, subscribe to my channel, and let me know in comment section and share it with your friends and families. Thanks for watching, and I'll be back soon with another video. Goodbye for now.